Right. So, guys, good morning once again, and we want to look at another question under partnership accounting. And this one says that the following balances were extracted from the books of Johnson and Selina Partners as at 31st December 2021. We've been given the figures. We have the current accounts, capital accounts, sorry. We know what we will do with that. The current account too, we've been given the opening balances. You know what we'll do with that. Then it's drawings, cash drawings, all right? So this is where you deal with that in your current account and also in your balance sheet because it's cash drawings. Then we have freehold, we have motor vehicle, we have plants, we have inventory. This is the opening inventory. We have purchases. So this is the purchases. We have sales here. Receivables are here. Payables are here, wages and salaries, motor vehicle expenses, general trade expenses. We have rate and insurance, cash and bank at the debit, Selina's loan 1,000. Then we have provision for bad debt. All right. So then we've been given the additional information. You are provided with the following information: inventory, that's closing inventory, provision for bad debt. For depreciation is as follows. Provision for depreciation, sorry. So we have motor vehicle, we have freehold, we have plant and machinery. And it says that provision for bad debt, doubtful debt is to be increased to. Okay, so this will be the closing. All right. So then it says that Selina paid salary. Selina is to be paid salary of 500 for the year. Then we have the partnership have agreed a charge on 10% interest on capital and on drawings. All right. So Johnson and Selina share profit in this ratio. So they've agreed that they charge 10% on drawings and capital. So we have those capital here in the drawings also. Yeah. All right. So now we've been asked to prepare income statement for the year ended 31st December 2021, then profit and loss appropriation accounts for the period. Then also we have partnership current account and the statement of financial position. So that is what we are meant to do. Then there's another question. That will be our question 4. All right. So just a quick one to do this question in a short video, like 15 to 20 minutes. Then we will take the other one too in a short video. All right. Okay. So now how do we go about this? Of course, we've been asked to prepare income statement. So our first attempt is to prepare our income statement. So the names given there are Johnson and Selina. Then we have income statement. For the year ended. (31st December 2021). Nicely underlined. All right, this is an income statement. So we begin with sales, right? So if you have our sales, these are sales. Where are you? You have sales 38,610. Do we have any sales returning? We didn't see anything like that. So we go on with less cost of sales. We have opening stock. The opening stock we were giving us 3,600. We add our purchases. How much is the purchases? 25,700. Is there carriages? There's none. So we have cost of goods available for sale to be less 3,600 plus 25,700. That gives me 29,300. So you less closing stock. Don't forget we've said that, and there's no drawings on goods to over here. We said that the footnotes are always treated twice. So the first treatment of the closing stock is here. We have 4,100, right? So minus 4,100, that gives me 25,200. Therefore, my gross profit, 38,610, gives me 13,410. So that is basically what I have. Now, is there any other profits that any other income I need to add? Per this question, we don't, but you need to be very careful. So go and do a workings on the provision for doubtful debt, because increase in provision for doubtful debt is treated as what? An expense, and a decrease is treated as what? An income. But if you look at this one, we were meant to treat it, increase it. So that one would definitely be what? An expense. All right. So if it were to be decreased, then the difference of the decrease will be an income. So we look at these sides, we don't see any form of other income in there. So why don't we continue then? And okay, let's continue then, and less our expenses. Less operating expenses. My advice to you is to go and look at the footnote and deal with what is there. So provision for depreciation is to be made. So my advice to you is to do your footnote things. So the depreciation, we have motor vehicle, and we are supposed to provide for 25% on the motor vehicle. So what is the value for the motor vehicle? Motor vehicle. So we look at it. That one is 1260. So I just do 1260 apply by 0.25. That gives me 315. All right. So the next one is what? Freehold building. And how much is that? We have 5% on what? We're going to look at it. Freehold building is 5,100. So you do 0.05 for 500. That gives me 255. Then the last one would be the plant and machinery. So that one is 10% multiplying what is the cost? That is 1,000. So 10% will be 100. So we have these depreciations. All right, then the increase in provision for bad debt. So increase in provision for doubtful debts. All right, so that one to the increase. So it is 125. Before it was what? 100. So it's an increase of what? 25. All right. So that is that. They said that salary is to be paid to a partner. So that one won't go to the income statement. These other two things are for appropriation. So what are the other things we can deduct from this expense? If you look from top to down, I think it starts here, wages and salary. So the difference between these wages and salary and the other wages and salary is that this one is paid to employees. The other one is paid to partners. So be careful. So if it is to employees, it comes under the income statement. So wages and salaries, how much is that? That is 4140. Then we have motor vehicle expenses. And that one is 1480. We have general expenses. General trade expenses. That one is 1994. All right, the rest I think we've captured it. So this one is we have Rate and insurance. And insurance, which is 964. Yeah, the rest is cash and bank and balance sheet item. So let's add it up and do our profit. So 315 plus 255 plus 100 plus 25 plus 4140 plus 1480 plus 1994 plus 964. What I'm having here. So when you punch it on your calculator, you just do a quick scan, go over to make sure that you punch everything correctly. If you did, then your answer is 9273. So that is your total expense. If I now take this one from 13,410, I have 4137 as my net profit. All right, so this is what you have. Then the next thing is go and do the B part of the question. We have been asked to prepare appropriation account. So the same thing. So look at the requirements of the question. So we are preparing II. It's still for Johnson and Selina. We are doing the profits and loss appropriation account for the year ended 31st December 2021. So equally, all right. So we bring the net profits from this side. We have 4137 like this. Like I told you in the previous illustration, this one you have worked for the appropriation, the net profit. So there will be no adjustment because all forms of adjustment should be done there. So quickly we add those basic things about appropriation. We add interest on drawings, right? Interest on drawings. So we were told that they do 10% interest on capital and on drawings. There is no current account interest, only capital and drawings. So where are the drawings they made? Selina and Johnson. So we have Johnson. Johnson did how much of withdrawal? We look at the 10% and how much of a withdrawal did they do? So Johnson did 800, so you get 80, right? And Selina did 10%, only 600, so that one will be 60. So we add here 140. If there was interest on current account, then the current account that will be in debit will also attract an interest. So once we add this one, the 140 to this, I have 4277. All right, then we less interest on capital, right? So we have Johnson and Celine. All right, so we have 10%. What is their capital? This one is 4,000. So that will be 400. Then 10% on 2,500, that gives you 250. So we are lessing 650, right? So that is that. Then, add again, salary to be paid. To be paid to who? Celine, right? Or Selina. Selina, salaries to be paid to her is also what? 500 for the year. So that gives us we take off 500, we take off 650. That gives us 3127, right? So that is that. Then it's now time for us to share. So let's share. Let's share this. So now that we have the profit to share, we share. So sharing of profit. So we have Johnson, we have Selina. The ratio we were given is 3:2. So here will be 3/5, and here will be 2/5. So we are sharing. Nobody guaranteed anything for the other. So that is where we land. So let's share 3/5. That gives me 1876.2, and that gives this one to be 2/5 times 3127, and that also gives 1250.8. So you balance this thing up with 3127 balanced. All right, so this is it. This is it. We've tackled all of these. It means that if you get anything wrong, then it is your calculator. So you have to check the way you punch your calculator too very well. So now let's go and do the balance sheet. But before you do balance sheet, you need to prepare the current account. All right, it's very important. So let's do the partner's current account. Current account. So we have two partners in this situation. Manage your space. So we have Johnson and we have Selina. Johnson, Selina. We have the CD signs, which is very, very important. Don't forget those ones. Okay. So you start balance, brought down. So they were all credits, right? Nobody had debit. So if you check, it's 1,000 for Johnson, and it's 500 for Selina. All right, so once you finish doing your balance like this question, we weren't told that they keep a fixed capital account or they keep a fluctuating. So you choose to do whichever you want to do. So in this case, I have chosen to do the fluctuating. Other than that, somebody can also decide to add this capital balance also in here. All right. Yeah. So that is that. Now, what then comes in? We said that we will now bring in the interest on drawings and the drawings itself here. So interest on drawings. All right. So we have it at the top. We have it at the top here. It is 80 and what? 60. And the capital is 400 and 250. So 80 and 60. And the interest on capital is here, which is 650 and 250, right? Or I've changed it up. Let's find out. Which one comes first? Oh, it's actually 400 and 250. So let's go back and do the correct. 400, 250. Then there was salaries. Salary was 500, right? Check it up. Yes, 500 to be paid to Selina, right? So you see it here, Selina. So you put it under Selina's space. 500. All right, then the share of profit too is there. So the share of profit, this one had 1876.2. You can decide to round it. And then this one is 1250.8. Then we come to our debit side to fix in the drawings that they took. All right, so the drawings, both cash, if it is cash, and inventory, you still put them there. So the drawings that they took, the cash drawing, we have here 800, and we have here 600. All right, so that is that. I think we are through with this. We can balance it off because all the figures here has been rightly positioned. All right, so you can go ahead. So which side do you think will be greater than the other? Balancing of account, you learned it, right? You look at this, you realize that this side will be definitely greater. All right. So we have 1,004. So here alone we have 1,004 plus 1876.20. That gives me 3276.2. So if I now take this 880 out, so it will be minus 880. The balancing figure therefore becomes, the balance carried down, therefore becomes 2396.2. All right, then I turn my attention to the other side. That one is I have 500 plus 250 plus another 500 plus 1250.8. That gives me a total of 2500.8. So 2500.8. This one was 3276.2. So if that is the case and I less 660, I have 1840.8. Now I can go and prepare my balance sheet. So we have Johnson and Selina. We have balance sheet. As at 31st December 2021. We do our cost, account dip, and net book value. Simple. Put in our currency. Our currency. We have our fixed assets. So that is that. What are the fixed assets we have? We have freehold buildings, right? Freehold building. What is the cost here? 5,100. And we have motor vehicle. Then we have plants and machinery. Plant and machinery is 1,000. Then we have 1260. This is our cost. So we have like 7360 as the total. Then the accumulated depreciation. There was no accumulated depreciation here, but we calculated our own depreciation for the current year. So let's bring them in. We had 255, 315, and 100. So 255, 315, and 100. So this one will be 9,000, right? Yeah, then the second one, 900, sorry. This one is 900 because it's already 1,000. Second one is 5,100 minus 255. We have 4845. So then 1260 minus 315. 945. So here we can have our 0, 7, 5, 6, 7. All right. So then we add the other side, 4845, then 945 plus 900. That gives us 6690. So that is that. That is that. All right. Let's check it up. Well, small. This one is 6 rather, right? So here is supposed to be 5 and 6, right? So here is 6. All right. So that is that. It's 6. So you get this. Then you come to your current assets. Current assets. So you test it down here. You realize that it's fine. So the current assets, we have inventory, right? Closing inventory. So the closing inventory is in the, so here is the where you focus on your double do's. The closing inventory that we have used before now is 4,100. Again, we do it again. All right. So then what do we have? We have receivables, right? Receivables. So receivables is 39. But the receivables, there is provision for bad debt we worked on. So let's bring that one here. So that one is 3960. Then we less what? Provision for bad debt, which the question told us was increased to 125. So 125, we take it out. So we have 3960 minus 125 is 3835. And that is that. Do we have any prepayment? We weren't told of any. Then we have cash and bank, right? Cash and bank. So the cash and bank too, we need to be careful because they did drawings on cash. So here we have 782, but they did drawings on cash. So drawings on cash we were giving cash drawing. So minus into bracket, we have okay. So this is where we need to be careful. This drawings on cash is just given to us inside the trial balance, not in the footnote. So you need to be very, very careful. I nearly thought it was given to us in the footnote, because if it is in the footnote, we treat it twice, but there is nothing like that. It was given in the trial balance. So we need not do any double treatment for that. Be very, very careful, as it nearly escaped me as well. So since it is given in the trial balance and it is not in the footnote, we don't need to treat it twice. So we have 782. All right, so that is that. Is there any other thing we've not catered for? I think we are good to go. So let's add it up. So we have 3835 plus 4,100 plus 782. So we have 8717. That's what I have. All right, so when I add it to 6690, I have 15, or let's do it the undergrad way. So this one, we go back 4,100 plus 3835 plus 782. So we have 8717. Then we less current liabilities, right? So if we less current liabilities, what we will do is there any trade payable? So we have, yes, payables. Is there any accruals that we need to? I don't think we have any accruals here. The payables are 3670. This is it. Okay, that is that. So that is what we have. So now Once we less that, so minus 3670. So we actually have 5047. That is what we have. So when we add it now, 6690 is 11737. So that should be our balancing figure. We come to finance by. So the finance by, we have capital. So current capital account of, so we have Johnson, we have Selina. How much are their capitals? 4,500 and 2,000, 4,000 Ghana cedis and 2,500. Together gives us 6,500. Then we have their current account. That one to Johnson and Selina. So that one we have to go and refer to what we've done before. So let's go and do that. What did we get? 2396. So we have 2396.2. Then 1840.8. So let's go and write them. It is good you write the balance down here again, all right? So like this. Because you pick those up. 1840.8. So now let's go and fix them into our current account. So we had for Johnson 2396.2. Then we have 1840.8. So when we add together, we have 4237. You see the 7 here has appeared, the 3 here has appeared, the another 7 has appeared. But when we add this, we have 10, so it's left with 1,000. The 1,000 is that loan for this Selina. So you add long-term debt. We have loan. So the loan is, the loan is 1,000. So we have 11,737. Here you go. All right, nicely balanced. And here you go. This is a short video. We will look at the other questions in our subsequent video. Thank you. Have a great day. See you in class soon.